This presentation, we're talking about managing psychology. Traders are burdened with a broad range of emotional distractions during trading. And as long as you can talk about those emotions, you can manage them. And in this presentation, we'll be going through one of the key factors that most traders encounter during a trading challenge, how to tackle them head on, and how to manage them. I ran a private survey on a selected few traders, and on a daily basis they checked their P&L over 80 times. That's their body telling them that I'm doing something I've never done before and I need approval that I'm on the right track. Checking your P&L so many times a day is not healthy at all. And the underlying cause is there's a lack of confidence and there's a need of approval. Simply because you haven't been exposed to a trading challenge environment. We haven't been exposed enough to make their behavior redundant. Because checking your P&L that many times won't help it. Your profit and loss won't increase or decrease. It will just create more stress every time you check it more. Now, checking your P&L is part of your daily process. So set aside a time where you'll check your P&L, either once in the morning and then again at night time. But if you find yourself that you continuously want to look at it, you know this is an emotional signal that you are a bit unsure and uncertain of what you are doing. And again, as long as we can talk about these emotions, you can always manage them. Two usual suspects of creating that sort of emotion is either one, you have a good setup running, you're in the flow, but you're a little bit uncertain. These emotions might have arrived in the morning or out of outside factors, but you feel a little bit on the back foot and you keep checking the P&L. That's your emotional signal that you are still on a good track of what you're doing, and you should be continuing what you're doing by trading your normal setups as long as you're in the flow. But if your distress comes on a place of uncertainty and fear and lack of confidence is stemming from a source where you are really not sure where you're headed, that's the time you want to take some time out. You want to give your body time, your mind time to readjust again, come back to the normal, standard ways of thinking. And it might take a couple of hours, that might take a couple of days, but it's crucial for you to calm your trading down, get a better perspective, and head back into the game when the need for checking your P&L is gone. During the challenge, one of the most mentioned things that caused emotional distress was forcing trades, because there was a natural fear that time is running out. If you have a certain time frame where you need to reach a certain goal, you naturally will feel pushed and forced to act quicker and draw conclusions faster from what you usually would do. Trading in itself is already pushy, and when you're encountered with a challenge that asks you to finish a certain task in a very short period of time, the urge to churn out a quick profit is perpetuated. That will just make things much more worse. Give yourself the gift of time, and much needed relief will come to your aid. The problem with forcing trades is twofold. One of the problems arises when forcing trades is that you will not give yourself time to let things evolve. You're going to push yourself out of your natural flow. Imagine you are trading for a couple of days and a couple of weeks, and you're in the flow of things. You understand the rhythm of the market. You feel connected. You feel your setups are playing out as you would imagine them, and you're able to manage your trades flawlessly. You don't question your own decision making. That's you in the flow. At the moment you start forcing trades, you're automatically knocking yourself out of that flow. You're not keeping yourself in the rhythm anymore, because you forced something that wasn't there. Now the outcome of the trade might be good or bad, but you will have lost that flow, which you probably will have worked days and weeks to get into. A good trading flow, a good trading zone doesn't come by every day. It takes time to develop, and by forcing a trade, you knock yourself out of that situation. The second thing that happens when you force trades, and out of the fear of running out of time, is you undermine your own confidence. You see, your natural standard way of trading is quite confident. You know what you're looking for, you know how to evade bad situations, you manage risk. If you're forcing risk, subconsciously your standard way of thinking feels undermined, and that erodes your confidence. And the more you force trades, the more your confidence goes. And when the time comes for your normal way of thinking, your logical way of trading to show, you won't be able to pull it off, because you kept forcing trades and you eroded your own confidence. So every time the need to push trades comes up, I like to call it the need for speed, because you fear of time is running out, remember, 1, you're possibly knocking yourself out of good flow. 2, you're breaking down your own confidence. Look at drawdown from a logical perspective. Drawdown is the basic structure of every trading system. Happens to everybody. As a matter of fact, if it doesn't happen, there's probably a flaw. So when you look at the drawdown, I want to look at it from a profit expectancy and use that as a guide to kick you out of that drawdown. Have a look at the next chart. This is an equity simulator on a trading system that is not particularly very profitable. Win rate is about 50%, like a coin toss, and the risk to reward ratio is a standard 2. You'll be risking 1% a trade. On average, during a 1 month challenge, traders place anything between 20, 30 to 100 and 150 trades. So we take the middle line and say about 50 trades. The equity simulator is calculating over 100 different types of traders. Now what is 50 trades? You can see that the average trader would have always made it into profit by keeping the risk low. Max drawdown was never more than 10%, and max equity was near to 50% in profit. Now when you go through a drawdown, it's difficult to see yourself out of a drawdown. That's why I want you to use a little bit of math. Look at the math of your system, of your situation, and that will give you the confidence you need to loop out of the negative thinking and start thinking about where you could be. Now imagine one of these traders here that went into a drawdown, traded himself out of it, and then went in another drawdown. Now here you could give up and not look out for where you could be. If you continue trading the system on a mathematical basis, probabilistic way, you'll be way in the back in the profit, just regardless of where you had the drawdowns. Because when you use the math, you usually tend to come out. Again, there's over 100 traders and the average was always up. As long as you keep your risk low, you can suffer up to 9 consecutive losses. Now imagine you have 1 or 2 weeks where every trade you place is negative and just loses your money. A normal trader would never, if you use emotion as a way of getting you out of the trading hole, you're getting nowhere. But if you use math, if you look at it from a logical way, you got a good chance of survival. Not only that, but you actually end in the profit. You need to be the type of trader that is not afraid to take a trade, that can manage risk and has winning ideas. I want you to develop the sort of mindset and spirit. Every day you come into the market, you're not afraid to take a trade. You are aware of how to risk and how much to risk, and you have good trading ideas. That becomes incredibly important during times when nothing happens in the market, where you get just doldrums, where market isn't moving as much or setups are coming up. That gives you a great psychological boost to wait these periods out. Because if you adopt the kind of mindset that that's the type of trader you want to be, when the time comes to show action, or sometimes time comes where you need to do nothing, you'll be able to do it much easier because you can resonate with that sort of personality. A trader that is not afraid to pull the trigger, a trader that knows how much to risk, and a trader that can come in the market and has winning ideas. So when you go through the challenge, through some days where things are a bit slower, or some days maybe things are moving a bit erratic, remind yourself what type of spirit you want to have during the challenge. What of trader are you? There would be a great boost to you to carry you through certain situations and certain periods in the market where things aren't always favorable. Risk is the possibility of something bad happening, and in trading, something bad means really losing money. And it doesn't matter what type of system or strategy you trade, there's always the risk of losing money. If you get your risk percentage right over the average period of times, over a certain amount of trades, you can tweak things so you can come out ahead. That means for almost every strategy, the risk is very little, so the chance of survival would be higher. That's the only key goal really in the challenge. They keep the downside risks as small as possible, and when the good trades happen, that's when you can let them ride out and enjoy the profits that come in. In conclusion, I'd like to say that there's a lot of emotions you will find come to you while you trade. We talked about some of the key ones, and if you can talk about them, you can manage them. I want you to use some of the emotions that you feel yourself to start managing a little bit more actively, not passively. You want to really take them head on. You want to listen to the signals that your body is sending you. You manage things a little bit more constructively so that you can beat the odds and come in the challenge out ahead. Thank you very much.